All right, so Mike D, thank you very much for doing this presentation for us here in the Trading Fibs trading room. Obviously, everybody knows this is for educational purposes only, not giving any specific trading advice, qualified or licensed to provide those financial advice. Got to do this for everybody in the room, so anybody watching this in the future knows that they should see a licensed stockbroker or financial advisor before making investments in stock or future markets. Trading markets or futures is risky, and we all know we can lose any of all our investments. So thank you very much, Mike, for doing this presentation. Really appreciate this, and you're on.
All right, thanks, David. Okay, guys, this is a order flow concept. I don't recall how far back it all started, but at some point we got access to numbers bars, which shows us the committed orders or the executed orders. And Infinity provides the numbers bars, the full data on the numbers bars, and people do various things with those. So I went to a webinar that Infinity put on by Shane Handy, the Rational Trader, and he does something a little different with order flow, and I found it really unique and interesting. And so I kind of reverse engineered what he did, and I call it volume at the edges, or vol at edges order flow. And I thought today what we'd look at real quickly is the concept behind it, the design behind it, how we apply it, and then how to set it up. So if you have any questions, I'll try and keep an eye on the chat room, but I know, David, you have a microphone, so if you see any questions come through that I don't get, feel free to interrupt. So the first thing to understanding what we're going to try and do here is that let's say that we're in a trading range, and let me get like a laser pointer. I'm pretty sure I'm going to need that at some point. Let's say that we're trading in a range, and the premise behind what we're going to eventually get to is that the trading that happens at the edges of the range, which would be these yellow areas, will have a greater impact on whether or not we break out of that range or not than the trading that occurs in the middle of this trading range. So, we see this all the time. You have a failed breakout, failed breakdown, and then eventually one of these things gets enough trading activity up here that it breaks out, and we break out of the range. So I guess the question I have to ask first is there any discussion? Does anybody need to discuss this in a sense of if you don't buy into this concept that the trading at the edges of a range has more impact on whether you break out of the range or not, then the rest of what we're going to talk about is not going to be probably as appealing to you. So here's our range, and then what we'll do with this range of trading is if we take that range and we apply that same range to a range bar, which is really just a small range. So on the NQ, for instance, we use a 10-tick range bar. So here's our 10 levels of price in a range bar. So the trading or the executed orders that take place out in, say, these, and I like to use 3 on each end, these top 3 levels, the orders that are executed up there will have a greater impact on whether or not we can bust out of the range or we stay in the range. So essentially what we're doing is we're taking a trading range and we're applying this concept to a 10-tick range bar. So if that's still making sense, if we look at the design of this, what Infinity provides is they provide, these are it's a 10-tick range bar, is they provide in numbers bars, they provide the number of orders executed at the bid and the number of orders executed at the ask. And you can get that displayed. They provide the total amount for the whole bar on each side. Now, and I know guys that can read these numbers bars and they're good at it, and part of what incentivized me to try and reverse engineer this thing and build this thing was that I could never understand what all of this stuff was, you know, these numbers and where they made sense or where they didn't make sense or whatever. So what we do in this concept is we take a standard 10-tick range bar, like for the NQ, YMCL, and gold, or if you use a smaller tick range bar, I go to like a 6-tick range bar for the ES and say beads or something like that. And you have a numbers bar study. And then based on what we talked about here, where the top 3 levels and the bottom 3 levels have a greater bearing on whether you break out of the range or not, on the range bar, what we do is we accumulate only the bid prices, the bottom 3 bid prices of the bar, and we accumulate the totals of the top 3 ask prices of the bar. So what that really represents is how much force is being exerted to the top side to force out of this range bar and create a new range bar to the top side, or how much force is being exerted to the downside, you know, action only at the bid, how much force is there to push out of this range bar and break to the bottom side and create a new range bar on the way down. So this is what needed to be custom coded, is the accumulation of these levels on the bar. And so once you have those levels and this concept makes sense, then what you can do is you compare the 2 values relative to each other. So the simplest way I found to display that is in the study down here, here's the total of your contracts executed at the bid, and here's the total of your contracts executed at the ask. So we can see on this particular range bar a whole lot more pressure to break to the top side than there was to the downside. So this type of a setup on the bottom shows us the relationship between what's happening at the top 3 levels of the ask and the bottom 3 levels of the bid. And so you'll see once you get a bunch of these in a string, you know, you can kind of see what's happening behind you. You're basically pulling the cover over off the range bar, and you're looking at what's actually taking place behind the scenes of executed orders. So I think we had 10-tick, accumulate. Yeah, we compare the 2 values relative to each other. That way, the other thing about that is that big or small volume days become irrelevant, because you're basically, you know, you're not saying, well, I have to have 100 contracts, or I have to have 200 or 300 or 400. You're just comparing one against the other. So if you have a low volume day, you're going to have smaller numbers on both ends, you know, traditionally. So the green horizontal line, let's see, it's buying pressure exerted. We covered that. So yet plotting in this manner yields this graphical representation. So eventually down the road, I found there was no need to even see these numbers bars, because I don't want to, the computer's adding the, you know, that's adding it up for me, these levels I want, and it's displaying it down here. So eventually these get hidden. So that's basically, that's the concept behind this and the design. This is what these bars at the bottom represent. So if we move forward, this goes back to my old system design work. What we do is we've accumulated a bunch of data, but data is useless unless you can infer something from it and you turn it into some information. And so there's actually 4 formulas, but I don't use one anymore. It was just got too many signals, and then they were too many signals, they weren't valid. So the 3 basic formulas that I use are buyer absorption, and this occurs, and you can set these levels, but I use 2 times. So when you have a bar where you have at least 2 times or more the ask volume versus the bid volume, and the range bar closes down, so if we go back a square, you know, if you have 2 times as much here trying pressure to break out to the upside as you have selling down here, and you get a red range bar, you know, logically a person would look at that and say, well, all of those people that were buying up at the upper 3 levels of the ask are now trapped. So The term that I use for that is just they've been absorbed. There's, if you have that much more buying at the top than selling at the bottom, that range bar should close up. So if it closes down, I just call that absorption. The opposite of that is seller absorption, and that's just the same thing. If you have on the bottom, of your bar, if you have 2 or more times the accumulated contracts down here than you do up here, and the bar closes green, well then all those sellers that were selling down here are trapped. They were trying to push that bar down to the downside, and for whatever reason, buyers came in and accepted all those sell orders. Buyers came in and accepted all those sell orders at the bid, and they rocketed the bar up the other way. So those people are now trapped. So the absorption is the strongest signal of them all. The next concept in here is exhaustion, and it's a little weaker signal in a sense that I'd find exhaustion as you have to have, for instance, when buyers get exhausted, you have at least 3 or more consecutive up bars in a row, and then on the 4th bar, well, let's say there's 3, so on the 4th bar you have not twice as much ask volume versus bid volume, but just more ask volume versus bid volume, and the range bar closes down. So essentially what I'm trying to infer out of that is that you've had a lot of buying. You've had 3 bars up, now you're on your 4th bar. You've had a lot of buying going up, at the top of that 4th bar, but that range bar closes down. So because of the 3 bars going up before it, to me that just means that the buyers have exhausted themselves. And the same thing on the way down then, seller exhaustion. That's where you get 3 or more down bars in a row, and then on the 4th bar you get more bid volume than ask volume, and the range bar still closes up. So the sellers then get tired down there. And then the third concept here is what I call buying and selling pressure, and that's where you get at least 3 or more times the ask volume versus the bid volume, and the range bar closes in the direction of the buying. So in other words, you just have some really strong push to the upside, and the range bar closes up. So now that kind of tells you that the buyers are really piling in, and then on the other side you have selling pressure where 3 or more times the bid volume versus the ask volume, and the range bar closes down. That just means they're really piling in. The sellers are piling in. And so the key thing to remember, I think, is that all of these, it's only, when I say bid volume and ask volume, by bid volume it's only these 3 levels over here, and ask volume is only these 3 levels up here. All of this other volume in the range, in the numbers bar, is completely ignored, because all we're really looking for is how much pressure is there to push that way and how much pressure is there to push that way, and let's compare the 2 against each other. And then let's set some levels and some criteria so that we can get some signals out of this that help us analyze what's happening in the market. So this is what it would look like. This is if you have the numbers bars showing. I think to go back to the basics of something, to understand when things are hidden and everything, you think you have to have kind of a feel for what's going on behind the scenes. So here's a 10-tick NQ, and these are the range bars, or these are the numbers bars, 10-tick range. And so if we just walk through a couple of these, we have, remember this is an absorption signal up here where buyers got absorbed. So if you look down below at our representation of that, you'll see that we have a little over 400, it looks like, buys at the top 3 levels. And we have, it looks like about 65, 100 and, I don't know, 110, 113 sells. But this bar closed down. So hopefully this gives you an idea of what we're trying to represent here, is that you would think with this much more buying at the top 3 levels than bottom, that this bar would close up and break to the upside. But it didn't. So what that tells us is that all of these buy orders up here at the ask got hit, got accepted. So there were sellers sitting up here, big sellers sitting up here accepting all those buy orders from these people. And now when the market moves down, all of these buyers that were up here are caught. because they bought up here and now price is going to start to go the other way. So here's a good example of this is a buying pressure up bar, and so what we have is we have at least 3 times the buying pressure to the top side as we have selling to the bottom, and the bar closes up. Now this, where it's, I don't want to really get into what it means in the sequence of events here. That's more in the application part. I would tend to ignore this, except maybe I'd go, wow, the buyers really came in here, maybe I'd pull my stop down or do something like that. But right now I think it's more important that we just look and see what these representations are. So we pop a little up, we come down, and now when we get a little bump, and now you have an absorption signal here where sellers got absorbed. So we had more than 2 times, red bars more than 2 times the green bar. So we had more than 2 times the selling here as we did the asking up here, and this range bar still closed up. So that tells us that these people down here, there were buyers down here that hit all these sell orders and accepted them, and they still had enough to push the range bar up, very little effort. So order flow tells us that this pivot down here probably has a chance to hold. And you'll see later you can even take these bottom 3 levels and like do an extending rectangle and go, that's support. I've got a slide I think of that later. Okay, price comes off this absorption, these sellers being absorbed here. Price comes off of there and it moves up. Here's our 3 green bars, and the triangle is exhaustion. So here we get just a little more buying than selling. It's hard to see down there, but we've had 3 bars up. So we find that this bar closed down even though we had more buying, and so this is probably a rest point. This is where buyers got a little bit exhausted. So we pull back, we get a good buy bar. This is not a good, you could cherry pick, buy and sell examples, and I think an important thing that I haven't mentioned yet is that I treat order flow as it's an enhancer, like an internal would be. I think if you really get to understand these, you can go, oh, that's probably a sell signal. But I really try to treat these as I have a thought in mind already about what I want to do, and does order flow help me confirm that? Let's say this was the 25-minute low down here, and then it pops off the 25-minute low, and then the sellers come in and try to bust through the 25-minute low, for instance, and they can't, and you get sellers being absorbed here. You go, hey, the 25-minute low is probably going to hold. So would I be interested in, I don't know, an earlier long there? Maybe, because you've got a level there that you might look at and go, I wonder if that's going to hold or not. At these levels that we use, well, order flow I think can help you make an educated guess or an informed decision about whether or not you think a level is going to hold. So I think I don't want to spend a whole lot of time on the interpretation of looking at these right now, and I don't want to go too fast, but I also don't want to burn up everybody's day. So I'm going to move to the next slide, and this is what I had said about you could actually take the bottom 3 levels in and say, well, this is where the absorption occurred at. So this is my support level. Here's a support level. So you had a resistance level here, resistance level here, a resistance level here. Even if you get some movement down the road, you go, I maybe would not be interested in buying until I get above these levels that I know the last time there were sellers sitting there. So, but this is more of a add-on to the whole idea, the whole concept of it. Now what gets interesting is when you take, because Sierra lets you do this, you take these alerts that you get and you plot them onto, say, a 1-minute chart. And I've tried to plot them on the Flex Renko, but something about the way the overlay works, they don't always show up. They show up better on a time chart. So This is our pivot down here that we talked about, the 25-minute low. And so here's the 1-minute chart coming down, if this is our 25-minute low, and then you see that on this move up on the 1 minute, absorption down here. So we know there was a great deal of selling that got met with a great deal of buying, and they're pushing it up. So placing these alerts on a different chart, because you don't want to, I don't want to watch the numbers bars all day. I don't want to have to do the math of it. I don't want any part of that. I really want to see what this is telling us on a regular trading chart. So here you get absorption of sellers and it moves up, and then you get some exhaustion, it pulls back, you get some buyers coming in, it moves up, you get absorption, you know, and then you get some pressure bars down, that pressure selling to push it back down again. I did this chart on that Wednesday last week, you guys, when it was so slow, because I go, all right, here's a good time to do this. So I knew that these charts were going to be, you know, they're not emblematic of how you could really trade with this, but I think what happens is you do see that when you get these order flow imbalances, so to speak, that price is reflected after the imbalance. Price does reflect what happened in the order flow. So if we move on, here's a 1 minute. I guess this was brought in to just show that here's our, if this is our 25-minute low again, we think that's a good level. And this is the old style chart, David. I did not update these to the new formulas you're using. This is the older stuff. So here we are. This is our 25-minute low. Well, here's VWAP. Here's our indecision bar, and we're like, do we want to take these or not? Well, this can help in that decision, I think, to say that, yeah, if I get the early signal or this one, yeah, I'm getting some, I know that this pivot is probably good. And so, and even if you wait until it's a normal trade that you would take, you know, just to know that sellers are absorbed down here it's a piece of information that you have about the market that tells me that my long is probably going to be good, you know, or at least it has a better chance of being good. And okay, this is something, this is the way I plot this stuff is I still, and David, you'll recognize this, this is a standard 10-tick range, Heikin-Ashi bars, 534. I know you guys in the room have seen me talk about that. I just think this thing is lead pipe as far as whether you should be thinking long or short in the market. And so this is the chart that I use, and I use this for varying reasons. Well, because you can see the intensity of when you do get a signal, you can see what the intensity of it is. I mean, look at this, how this towers over everything else. This little interchange right here. Look at all this buying versus selling that got absorbed. And you get an indecision bar in the Heikin-Ashi, and then the market moves down. But this is a lot higher than these green marks. So you know that there was a big war that took place up here. So I do like to keep these visible, not the numbers bars, but I like to keep these visible because over time I've kind of learned to interpret these a little bit just by the spacing difference. Makes a difference, the difference between the lines and the height of them. You know, that I think goes towards intensity of what's happening in the order flow behind the markets. This 3 over here is a countdown timer that counts down how many price levels are left in the bar. So the signals that you'll get here are most valid when, of course, that's a 0, and your 10-tick range bar has got all 10 price levels filled out. And I'll come back to that because during the setup I'll show you that there's some different ways you can have these alerts show up or not. And like I say, this was not a good trading day. But when I do start seeing stuff like this, I'm like, you know what? I'm just not going to trade until I'm outside of the levels where this stuff occurred at. You know, it helps me. You know, of course you can see you're consolidating, but this can give you actual levels where you go, I'm just not going to trade until I'm above or below certain levels. So what do I do here? Oh, David, here's what this is the 5. This is the. I like to measure the legs, David, the way you taught, or that 534, and then the fib price projection tool. And over time, I've realized that there's certain levels that are happen more often than others. And it seems like when you get a 534 cross like this, you know, you measure the pullback like you would, and then a 61.8 move is almost mandatory. So you get a pullback that holds, and this doesn't have to do, this ties into order flow, because here's your pullback that holds. You get a big buying bar right here, look at that, and then it pulls back again right here, and you get a big buying bar, a pressure bar up. I'm probably liable to take this at least to, you know, you're figuring you're going to get the 61.8, and it just seems like big money doesn't do a 534 cross unless they can get a minimum of 100% measured move. And that's just from observing this, well, since David showed me this, what, 2 years ago, 2.5 years ago now, or something like that. If you only get a move to 61.8, I call that, that's like a failure, that's breakout failure, and start looking to go the other way. Just seems like big money wants to do this. So this goes all the way up to 423.6%, and I'll show some charts later if we want, that the market is fractal, and it adheres to these levels, and the way I use that then is you can measure the maturity of a leg. You know, Fibonacci people, I think, work in legs. They measure legs, one leg at a time. And this is an up leg that started. And so you can measure the maturity of a leg. So if we get over like 200% into a move, or maybe a stitch higher, one of those next levels, I get really hesitant to re-enter, because I just think that those are turnaround spots up there. This is kind of a whole nother, this is, I don't know, it's different than order flow, but this is one technique of David's that I can't seem to get rid of. I just refuse to get rid of that. So what am I going to do here? Okay, alert on 10 tick with Heikin-Ashi, Fibonacci. Okay, so here's our flex Renko move off of that, and you'll see that we get right up here to the 100% move, and then we get some absorption and a pullback, and this one eventually went into consolidation. But so these are a couple different ways that I use the order flow information. Cherry-picked example, of course. Here's a move down. You know, we were up to the low tick 50. We're underneath the 144. We're probably going to take this move anyhow, I'm thinking. But you get this pressure bar up here, 1, 2 of these big selling bars up here right at the top, and that's displayed over here on the 1 minute. So it really kind of makes you think, well, you know what, I don't want to trade maybe into the 144, but boy, the sellers are really piling in here. So do I have a shot at it breaking the 144? Yeah, probably have a little better shot at it, you know. And then your low tick and your high ticks down here, you've got some room down to your 50s. So you figure you can probably get down there for some targets. This maybe was that Wednesday. This was maybe the only, this was like maybe the only good move of the day. Trader Bob, you say 534 good for smart money. I'm not sure what you mean by that. Anybody? I know it works. There's another ES guy I know. He uses a 34, but he uses a 3489. David's technique here with the fib projections, I think, is far superior to that, because it helps you to determine where you're at in the length of a move. I don't think I answered your question, Trader Bob. I don't think I did at all. I still don't actually. I don't quite get. I use the 534 to stay on the right side of the market. There you go. Good call, David. Do you want to ask a question, Trader Bob? Okay, we'll move on. We can come back to that if we want.
What I was talking about, you mentioned the 534 cross usually gets to the 100% if it's good for, if it's really going to work. Otherwise, it just goes to 61.8. That's what correct. I was referring to.
Yeah, and I'll show some charts later. There's levels beyond that. I just kind of over time, I'm like, God, they just always seem to go to that 100%. Now, today we were in that range, and it was 61.8 failure to the top, 61.8 failure to the bottom. You know, it just kept vacillating between those 61.8 marks, and there's no momentum in that market. We knew that anyhow. You know, in the trading room, we knew that.
Oh yeah, it was sad.
Yeah, but yeah, we could, you know, but you can measure it, you know, and I was short the other day and it held at 61.8 and order flow, I think it was yesterday, order flow kicked in and I saw we got absorption, sellers being absorbed, and then buyers starting to come in with a pressure bar, and it was at 61.8 and I just bailed on the trade. I didn't take a full stop out. I said, you know what, this is looking like it's going to be a breakdown failure. Order flow is kicking in to confirm that. And I just brought my stop down to even right away, and you know, and got taken out at even. But I didn't sit through the whole. I didn't sit through the whole pullback. You know, I didn't sit through my whole to my whole stop, wondering, is this level going to? Is this just a little bump in this level, or is this thing going to hold and rocket out of here to the top side?
Right.
It's starting to look like it's going to rocket out to the top.
Okay, thanks, Mike.
Okay. So, wrote a couple of DLLs, a couple of studies, and the first one is just the TST is the name of my trading company, TriStar Trading. TriStar is that rare candle formation, you know, anyhow. I didn't know what else to do years ago, but so what all this study really does is you can set the number of levels that you want to accumulate in your range bar. So if you have a 100-tick range bar, you could set this to 30. You know, if you like a 20-tick range bar, I like to go about 60%. So you could set this to, you know, if you say you had a 20-tick bar, I would probably use, probably about 8, I suppose, somewhere in there. You know, you'd accumulate like 8 levels. You want to cover about 60% of your bar total. So on a 10-tick range bar, 3 and 3 is 6. So this tells it how many levels at the top and how many levels at the bottom to accumulate. Excuse me. What else did I put in here? This is where you set up. This is your bid. It's a bar. That's that solid bar going straight up. Here's the ask. That's the dash going across. You can set this up any way you want. You know, I've seen, for me, this works the best. But you could try some different types of draw styles down here and see what that looks like. And okay, then this is the second DLL. I probably should have had them in one, but I wasn't coding that well at the time. So this is a second DLL that does just the alerts. This is the study that paints the squares and the diamonds and the triangles. And so to have this work properly, the price levels to accumulate have to match between the two studies. That's really the only big thing here. If they don't match, then of course you're not going to get your alerts in the right spot. The options in here, this bull momentum and bear momentum alert, I turned those off. That's that fourth one that I spoke of earlier, and all that signal was if you get let's say you get a bar that has the ask greater than the bid, and the next bar the bid is greater than the ask, you know, they go, well, that's a change of momentum. Not really, you know. In my view, it wasn't. I coded it in there originally, and then I just shut it off. So it's not. It placed signals in place, and I go, they didn't really affect. When you looked at where they were placed, price didn't move off of it. So, you know, so that's shut off. Then you can turn. Here's your bull and bear exhaustion. You can turn that on or off. And then this signal offset is how far away from the high or the low of the bar do you want to place your alert signal or your alert icon. And this you experiment with. If you use oil, for instance, you need more ticks because there's 10 ticks to a point. If you use the NQ, you can buy with less ticks of spacing. And I can show you that later too. You get by with less ticks of spacing because there's only 4 ticks per point. So here you can turn the exhaustion and the absorption stuff on and off. Here's your absorption signal, this offset in ticks. You can set that to what you want. then this is where, if you don't think that absorption should be 2 times, say 2 times the bid versus the ask, if you like maybe go, hey, I want 2.2 or I want 5 or I want whatever number you want, you can change that in here. I just found over time that what I did was I went back through charts and I tried different numbers, and then I looked to see where the alerts showed up relative to where price moved, and 2 seemed to reflect it very well. So I've just always left it at 2. And then the last thing I added to this, I got from somebody, I think it was in this room, or maybe another room, they're not trading anymore, but I was looking for something that told me when is my move really a good move. And he had done it on a spreadsheet, and I'm like, so I guess I'm like Bill Gates, I'm taking things from everybody. So this is this pressure bar that says when we really have a great degree of buying or selling pressure, and I set that at 3 times, and you can set that. These are all these are not integers, so they're floating points, so you can be 3.19875, whatever you want to have in there, whatever you think works for you. The other thing that it's a little subtle nuance of this is that as these range bars are developing, you're accumulating levels. Well, if you come to, let's say you're 6 levels in, and your 7th level then gets some trade activity, well, that changes the relationship between your upper and your lower 3. So you can set this to calculate only on bar close, which means it will not show you an alert until the bar has closed. Then you can calculate intra-bar with no price overlap. So what that means is, like on a 10-tick range bar, and you need 6 levels of data to have any kind of a signal, because you don't want to have your bid and your ask calculations overlapping each other. This will give you early signals. So there'll be 4 price levels left in the bar, the range bar, and you can start getting signals. Now, if you're very new and watching this, I wouldn't recommend this. And I kind of went back to on bar close as well. It can give you some stuff, and you go, oh, it's going to absorb, and then 2 more price levels come in, and poof, it's gone. So I know I painted this here with the yes right there, but I switched all my stuff recently back to just on bar close. And then this last one is, I don't even know why it's in there, I guess, but this just starts giving you a signal right away, and that's just too much misleading stuff. So I actually had this first, and then I added the other 2 after that as I found out what it needed to do to get better signals. So we got a couple slides here yet, you guys. Okay, and this is where you set up under subgraphs. You can set up what you want things to look like. So if you don't like the colors I've chosen, or you don't want to use a diamond or a square or a triangle, or you want them bigger or smaller or whatever, this is where you can customize the look and feel of the alerts that paint on your screen. All right, one more. Okay, I guess that's pretty much, in a nutshell, that explains what this volume at the edges order flow thing is about. So if anybody has any questions, or what I found is the best thing, is you go out to some live charts and you find some maybe trades that you took during the day or didn't take, and then you would say, well, if you apply order flow, would it help me have made a better decision there? And so with that, I guess I would kill this, and this is a setup that I'm using for the NQ. And it's interesting, when David said earlier today, he said, well, that move down really started to take off and then just stopped. Well, here's the 25-minute low. This is where I got the example from. Here's the 25-minute low, but if you look at the crosshairs down on this chart, we got exhaustion, which is the triangle, and absorption. So in other words, we had at least three red bars down, and then at the bottom here, we got not only more selling than buying, but we got more than twice as more. So that's what creates this exhaustion and absorption. That is a very powerful signal. It means we've already had a move down, and the sellers were really piling in down here, and the buyers came in and they bought everything that was for sale, and now we're probably going to go the other direction. Yeah, good call. Is that better? Okay, perfect. All right, so if we go back to that, I think that was, no, I lost my spot on that. Yeah, I think we went right, hang on, I got to go look again, time of the day. That happened at 11 o'clock. So this is a little bit cherry-picked, but this is, I think this is a good example of how you can use this. So that was 11 o'clock my time. Remember, I'm in Central Time here, you guys. So at the 11 o'clock mark, which is right over here, this is what I was looking at on the 534 chart, was here's your move across. If you price project this, the way David, I think, taught us to do this, here's roughly your 61.8 level. This thing, if this is where I think they trapped people here, is that they, if the sellers, the uninformed sellers or small money sellers, whatever you want to call them, weak sellers, thought this should go to 100%, for whatever reason, big money stepped in today and created this exhaustion and absorption signal with all this selling down here on this particular bar. All this selling got absorbed, and they popped the range bar to the top side. I don't need to see the range bar. All I know is that my Heiken Ashi here got absorbed. So this moves up to the 34, and right where you would expect, at the 34, you get exhaustion and absorption from the other side. So you got a little war going on here, which we knew we had today. Then we get a pullback, and this is the one that's gorgeous, is that this absorption signal right here lining up with, look at the amount of selling that took place in this range bar versus buying, and it still broke up. All of these people are hosed. And we know what happens when you know, the market doesn't make a move until it traps somebody. It's, you know, I believe that. So this is the trap right there. That's a bear trap. That's going to help propel this up. Now, it didn't go very far, but so if we shrink this down a little bit again and look at what happened here, this did clear through. It cleared through the 144, it cleared through the low 50 tick thing, it cleared through VWAP, but part of that, I think, was because after it cleared through there, we had all this selling that came back in again, and it all got absorbed. So this is probably good for a move up yet. So if we look at that on a 1 minute chart, I have to scroll this over, I think, to get us to a 1 minute. Here's what it looks like on a 1 minute chart. I'll expand the 1 minute and we'll walk through this thing again. Okay, so here's our 11 o'clock on a 1 minute chart. So here's our exhaustion and absorption right where you would expect to get it, or we thought we should get it. And then this thing moves up, busts through all these levels, and then you get exhaustion and absorption here where you think takes a lot of effort. That's a lot of buying exerted to bust through all of this stuff to the left. You've got all this stuff to the left to try and churn through. So we get tired here. Well, then it pulls back, but during this consolidation, all of that selling that was taking place down here was getting absorbed. So I'm not looking to sell this down here, even though it looks like maybe, like David said, it just took off and didn't go anywhere. I'm not looking to, as this thing played out, you know, you have your 13 and your 50 moving up, and you're sideways on the 144, but you've had a bust out of here now, you're holding a level, and you're getting all the selling being absorbed. I'm interested in this move right here. That move interests me now. And granted, it got tired up here, but that's all right, we're in an uptrend. But you know that if it gets tired like that, you go, okay, I'm going to move my stop up to underneath, I don't know, this 1 minute bar right here or something. If I had it down here where I entered, now I'm going to move my stop because I'm seeing signs of tiredness. So I'm going to maybe tighten my stop a little bit or something. It doesn't have to take you out of the trade, but you would say, well, okay, I might tighten up a little bit. And then this eventually, you know, played out as it did during the day. this got absorbed up here. So if you look at these top three levels, 1, 2, 3, late in the day here, which would have been 1:30 Eastern time, I was not looking to get, I think I was back at that time. I didn't get a trade in all day, by the way. But this is where you could take that extending rectangle and go, here's 3 levels. I think I got 3 levels. Let's color this red. And you go, I'm not buying until it gets clears that, because I know that at these 3 levels, that's where the sellers were last time. So I'm not buying this until it clears it, pulls back, holds it, and converts it and goes. So this little fall test.
Muted.
Okay. So, I mean, and this is a crappy day, you guys. I mean, seriously. But here, look at this now. We know we have a resistance level up here. And now this little bump off the 144 got absorbed here. But we're thinking maybe short. I think David mentioned short at the end of the day. We're thinking short.
Unmuted.
Hey, Mike.
Probably get your pad, I think.
Mike, can you go back? Mike, I lost the speaker for the recording here. So can you go back to the area where you were drawing that horizontal bar and explaining that on the breakout?
Oh, yeah, sure. Yeah, let me scroll back a little bit. Okay, this goes back to that slide that I showed earlier, where if you really wanted to, you knew that because this was absorbed, this is absorption, remember buyers got absorbed, and we're accumulating at the top 3 levels of a range bar, which we don't have to see because we know we have 1, 2, 3 levels right here. This is the part of the range bar that we're not looking at that is where the buyers got absorbed. Sellers were sitting here, big money sellers were sitting here waiting for these buyers, and they're going to slap them down for whatever reason, doesn't matter. So we got this absorption here, so you mark this area and you go, that's my resistance. And so you did get a pullback off of this absorption up here when buyers got tired and the sellers tried to step in. So let's say the 144 holds, but now I'm not interested in this breakout here, simply because this is where it got stopped last time. So this is where an ABC move, I think, would come into play. An A leg that clears, a B leg that pulls back, and a C leg that bounces, and that's your conversion. That buy right here on the C leg would be beautiful, because you've now broken through that level of resistance and you've pulled back to it, and then you bounce, so you've cleared and converted it. And so I'm not a breakout trader. I don't like these things that, you know, I like that ABC combination, especially where you know you have defined resistance. And if you look at the this at the bar down here, you can get an idea for the magnitude of how much it is. It wasn't this is a monster bar. That thing's huge. Look at that compared to the rest of the day. Look at how those sellers just got well, to be crude, they got their butts handed to them right here. And you can see it. This is like reading a book in my estimation. You know, you can just see what's happening, and you watch this long enough and you can go, oh, you know, you can see where people get hosed. And that's when the market makes moves, is not until if you believe in the bandwagon theory, they don't make a move until they can trap some people, because they need these trap shorts. They don't want to buy this all the way up. They want the trap shorts to push it up for them. So that's how that move takes place. So that's just a real quick analysis into today. You know, if we want, we can go back or if anybody has a trade that they thought they liked, you know, here, this is, you know, we can certainly look at it. Here's another, I think this is probably going to be, yeah, this is coming off the bottom here. What I did, David, is I took, if price clears the 10, you have the 2 buy signals that in your studies. Okay, yeah, the reason for the diamond and the square. All right, let me find one. Let's go back to that one, and let's find one here. Here's one. We'll just pick on that one. Okay, so to have the diamond is exhaustion, and we defined exhaustion as 3 or more bars in this is buyers being exhausted. So we define that as 3 or more up range bars, which we can't see. Maybe it would help to do this. I lost that. Oh, no, there we go. And let's just do this. So here is here's our exhaustion and absorption signal we're looking at right here. Let me just try and do something there. That didn't work out very well. Let's do it this way. That's the signal we're looking at. So preceding the diamond, which is exhaustion, we had 1, 2, 3, 4 up range bars. And then on the 5th bar, we had more, we had a lot more, but we had more buying at the ask than selling at the bid. And so that's our formula for exhaustion. 3 or more contiguous bars in the same direction, and then more buying than selling. Now, our exhaustion or our absorption signal says you don't need the 3 bars for absorption. You just need to have more than twice the ask action as you do bid action, and you go, and the bar closes in the opposite direction. Look at all this buying versus selling, and that's a downrange bar. So all these people at this upper 3 level that bought up here were met with heavy acceptance of those buy orders, and the accepting of the buy orders eventually overwhelmed this huge degree of buyers and slammed the bar back down again. So that creates an absorption signal. So that's why when you get exhaustion and absorption, that shows you've already had at least a 3-bar run-up, and then that 3-bar run, now you're getting a red range bar, a down range bar, and it's the degree of buying at the top 3 levels that determines whether you get just exhaustion or whether you get absorption as well. So this is a gorgeous signal to say, you know, I don't know what the Flex Renko looks like on this, but does this answer your question, David? Does it make it a little more clear? What's going on behind the scenes here? That's the hardest thing is knowing what's going on behind the scenes. So if we were to take this and measure this 534 crossover, see if I get on the correct fib here or not. And let's move this back up and out of the way again. And pull this down. Okay, so this fib, here we have our 534 crossover. Oop, I have to do this. This would have been the first time I measured it, but then we had this move to 61.8, and then we had a lower. So ideally, I would want to reset this fib to right here. So this thing is at a 161.8 level. It tried to break through it. You see there's more, hang on here, there's more fib levels all the way up here. And we didn't have any good runners, so we can go back and find a runner that goes to 423.6, and I'll tell you, I've typed it in the room. You get to that level and you get exhaustion and absorption, just sell it. You know, I mean, nothing's guaranteed, but holy smokes, that's a very, very, very mature leg, and then you get this type of order flow action that tells you that sellers are really stepping in, and you're very mature, and you go, I'll take a shot on that high being the high. You know, it may be a one contract, you know, not a full play or something, but I'll spend 50 or 100 bucks to see if that's the top or not, because I have pretty good information that tells me it is. Anyhow, so this we get exhaustion and absorption, and then the bar following that tries, this is a failed retest, we get absorption again. I mean, here you have another, if you look down at the bottom, you have twice as much buying as selling, at least twice as much, and we get a down bar, a down range bar again. So this is probably ready to move down. Now hidden in here is this little triangle, which is a pressure down bar, which means we have more than, and this wasn't very strong, you can see, because it's so low a volume. But at the bottom there, you have at 3 times more selling than buying, or I should be consistent. You have 3 times more bid than ask action, and the range bar closed in the direction of the dominant action. That's a good pressure, you know. So if we find something like that in, you know, maybe it's time to go find a really good, cherry pick a really good run here and see what, see, I can enable these. Let me try this. You don't get them all with the Flex Renko is the problem. Where's order flow alerts? Let's turn them on up here and see what we get. I really like them on here, to be honest with you, but they don't always show up. So, but if you can find, you know, you find a good run, and then you just start comparing in that run. I got these things kind of out of whack now. You compare on the run. I think we're going to look at a, I don't know, we had a good cherry-picked bottom over here somewhere. But, you know, here's a, we have to go to, like, when was a good day, you guys? Was it Friday? Friday was that a big trend day? Well, here's a beauty. Let's just do this one anyhow. This is how I would try and trade this thing, is you get the 534 cross. This is after hours, but it doesn't matter. We'll do it for illustration. So once you get the 534 cross, you can do your projection that David has outlined. And you see how things, they hit levels, and then they pull back and they stop. And they hit levels and they pull back and they stop. And I have too many projections going on here now. Let's just get rid of a bunch of these. And we'll redraw this. I missed it a little bit there. So some days all I do in my whole day is I just draw Fibonacci's. You see how these, it's fractal. Pat will tell you the same thing. So here's your 534 cross. What that looks like up above is this. Now this X I put on there, that's when price crosses above the 10 T350. Or I mean, sorry, the T310. That's my own thing, David. That's not part of what you had in there. So the white bar is your buy or your long bar. And this is my early entry signal. So if I get good order flow confirmation down below and I see price cross above the T310, based on what all happened here and what the level was coming down and how, you know, maybe we were at a you know, 261.8 level and then everything kind of came together and I'm like, I'm going to take an early entry on that one. I wouldn't do it at 100% level because there's too much left to the downside, but you get far enough into these fibs and you start looking for reversals like that based on order flow. You get a 338.2, say to the downside, and then you get a good order flow combination, you go, as soon as price clears the 10, I can get long there. But this is the standard price over the 144 above the T350 that the room uses. But the nice thing about that is you got this triangle, which was an upward pressure buying bar, that came right on your buy signal. So that's kind of cool. And then over, here, let me make this bigger just as long as we're going to do this. So let's say we bought this thing down here, right? Now, on these pullbacks like this, and you get a buy or you get a pressure signal like that, I found that I can buy the bottom of the bar down here in anticipation of it recovering. That's a subtle thing, but I noticed that one maybe a couple weeks ago, and I'm like, hey, you know, this seems to work out a lot, that these indecision bars come down, and then order flow tells me that it's being met with buying pressure in the order flow. We'd have to go to, what time of the day is that? I think we're on this one, right? Or no, we were on this one right? I lost my place, you guys, sorry. We'll have to go back and find it again. Yeah, down here, this was at 15:05. I know it's after hours. 15:05 my time is after hours. But if we go find that on the 1 minute or the, go find that over here, you know that that you have on this pullback, which is a pullback on the 534 down here as well, which means I'm looking for a bounce off the 34 to get long on an ABC anyhow. Then you get the triangle that comes in, and you're thinking, all right, so this is the pullback that I want, and then you go, well, why should I wait, or I wouldn't have to necessarily wait for your solid body tail up to form. Based on this down here and the order flow, I'm going, I might just buy down here in these red bars down here and get an earlier entry with the assumption that here's my long signal anyhow. This probably is not going to, based on order flow, this is not probably going to break the 34 EMA down on the bottom chart, so I can safely buy the bottom of this down here, maybe one contract to get started, and then you put another one in up here or something once you get your trend started. So that's a subtle way of using this as well. I just think knowing what's going on behind the scenes and having some type of parameters set to them so that you can go, this is what I'm trying to, this is what's going on behind the scenes. And we used to not have that information. And I don't remember when it was that they brought it out and they were forced to give it to us, but I think the 1 minute, I'm not even sure what the 1 minute looks like on that, but I usually shut them off on here. And it's the Flex Renko, that the way the study overlay works. I've tried, David, and maybe you know this, or anybody else in the room, I've tried adjusting, like use, instead of use latest, use nearest or earliest or exact match, or and they just don't seem to show up on the Flex Renko, which means I have to keep my eyeballs moving to these other two charts to see what's happening. So that's, I don't want to keep everybody, I know it's been a day anyhow, but some of these trends, when you look at them and you go, well, what's going on? I'm running out of data now, too far back, but so there's a lot of things in combination. There's a lot of things in combination here that work. The 534 cross off the bottom, and I even changed my 534 trender bar here to be the 534 on this chart and not this chart. This 534 means more to me than the one up on this chart. So this 534 up here reflects this chart down here. So it kind of, in summary, the order flow is not a buy-sell signal. I don't think you should use it as that. I think you have to have a good, solid trading idea first. You have to know what you're thinking, what you were probably going to do anyhow, and then does the order flow help confirm that for you? That's the way I use it. Sometimes I'll get really aggressive on a, like I say, you get to a 423.6 on this chart down here, and I don't even know if I don't think we've had a move big enough to where I can even show that, but we haven't had one in the data that I have here that would go far enough. But boy, you just don't see it go. Well, let's look at this one. Maybe this is it. Let's see what this thing. You always start at. See, this is a leg. The leg starts here. So even though this is down below, this is still a part of the down move. This actually starts the up move. So if we measure this thing to here, and then I'll measure these things and I'll go, wow, does that, you want to see some levels. You want to see it stop at some levels that make sense to stop at. And then you go, yeah, I'm on the right fib now. Sure looks like I'm on the right fib. The only thing that screwed me up here a little bit was this ended shy of this target. And I'm like, what's up with that? So maybe big money was trading, for lack of a better term, this fractal. No, that doesn't do it either. So I don't know, it's just a weird one. It's been weird the last few days with low volume like this. Some of this stuff doesn't always adhere. And this is not a science either, I found out. You draw a lot of fibs and then you go, oh, I should use that instead of that but basically it's your most recent down move, 534 cross, high, and then your ABC, the bottom of your C is where you measure this stuff. If David, correct me if I'm totally wrong on that. But okay, Barry, I've been missing questions. Yeah, you guys want to see a CL chart? Yeah, it does. I can either try and flip to my CL. Here we go again. Let's try this. I'll try and get to the CL screen. If you guys tell me when you're tired or you want to quit or whatever, I'll stay here until the cows come home. Okay, let me get that. Now I know how to do this. I can find that screen. There we go. Okay, you guys see the oil? Might try an overlay of the fib forecast. Pat, what do you mean? Do you have a microphone, Pat? Okay,
yes,
come back to me.
I do.
Okay, go ahead. I'm sorry.
The video that I did for David that he includes in his newsletter every week, there is a way to come up with forecast levels using Fibonacci for the next trading day, and it's fabulous. Fabulous. I can't tell you how well it works and how many years I've been using it.
Oh yeah, that's the fib levels hit for the day and stuff, right?
Yeah, and you can combine it. You can combine it with fib levels. I haven't done this for David in a video, but you can look at two different fibs. One is based on yesterday's high-low range, and it has limited levels. My high of the day target today in ES, for instance, was 42.25 to 42.75. And
that's what I had, yeah.
And it went to 42.50.
50, right on the nose.
And that's just based on fibs. And
yeah. Go ahead, sorry.
The forecast that I did for him in the video is very, very powerful. It really works. And the
markets are fractal.
Yeah, exactly. And the degree of accuracy for that fib is plus or minus 3 ticks. I don't know how you can get much closer than that.
Yeah, there you go. So let's say if you had, if you got to 42.50, and I'm looking at 42.50 with order flow, and you go, well, okay, I've got, I'm showing on that bar, I'm showing buyers got absorbed at 42.50.
Yeah,
gives you more confidence in that level.
It's confluence between the methods.
Exactly.
And you can use combination of fibs, you can use support or resistance, supply and demand, order flow, whatever you want to call it, but it's the combination of methods that makes it very powerful. And the more things come together at a particular price, the stronger the level is.
Exactly. That's kind of what, I have the midnight open on my charts, and I haven't gotten to the fib, like you're doing with the fib projections. I haven't overlaid all that on there for the next day yet.
Start watching that in addition to your order flow work, and you'll be very impressed. I put a couple of charts in the room today, and when I did, you'll notice two thick or two wider horizontal white lines that says frame, and today's price action was framed between 26.50 on the low end and 42.50 on the high end. I was long, and I got up and we left, and I had lunch and had my exit at 42.25.
God, that's awesome. I heard of somebody else that can do that. They place their trades and then they They just kind of leave.
I have
So,
to.
so what did you have?
Because if 42.25 was my exit. If I don't step away, I get too nervous watching the trade. I have fabulous entries, great targets. I just can't manage worth a flip.
Oh, so you just walk away.
The best thing for me to do is to walk away.
There was a woman, Tony Turner, did that. She would put her plays in the morning at like 8, at market open, and then go shopping, come back at the end of the day and see how she did.
Well,
She
if you're confident with your levels, that's what happens.
Yeah, so, this is a chart of that ES guy that I refer to once in a while. He worked the big banks for 30 years. He maintains his 3-day central pivot zone as a wall, and it is. And he says these statistical extreme zones and these calculated levels, he goes, this is how big money is calculating their levels for the day.
Yeah.
And so, he said there was strength up to 2142.75 was his target for the day. So he's right in there with yours.
Right.
This is where he thought we could get to, is this stat X zone up here.
I love it.
Yeah, so I kind of use that stuff too a little bit,
Yeah.
So, all right, so if the oil works the same way, you guys. Oil works, hey,
Mike?
Here's all the oil signals for the order flow, but everything works the same way.
Hey, Mike?
Yeah.
So before you continue, what Brad just posted, but can you cover the first chart that you explained on the absorption, the exhaustion, the signals were great, and then you followed through with the study. So, and I don't remember if you said, was that proprietary, or that was the DLL that you created, or, how does anyone, go ahead.
Yeah, okay, so the way to do this, and I've thought about it, David, and I don't mind sharing this, I don't mind putting out to people probably within your room, and
that's all we did if we did. It would be...
Yeah, I'm sorry, go ahead.
Yeah, that's all we would do. We would keep it in the folder for the members charts and understand that that's just for members.
Yeah, and what I would probably do is I'd put the DLLs up there I can do up some type of instructions, and then, it'd be nice if it just stayed within your room, but I'm not going to take the time. Sierra has a way to do an ID check, and you can't run this DLL unless your name's in the database and all that. But I really don't want to do that. But I'm willing to share this. I think it's interesting stuff, and it cost me a few hours to reverse engineer it. I didn't buy this or anything, so I don't have an issue with that.
Okay.
So what I would probably post is this main chart with the numbers bars hidden, and whether or not the Heikin-Ashi bars are there or not, but the key thing is the numbers bars and this and the alerts, and then you can overlay them to any of the other time charts that you want. So I don't think that would be that difficult to do. You drop the DLLs in the, you do have to use a fixed range bar. So you can't use a flex Renko. You have to have, all right, I'm using 10 ticks and I'm using 3 levels. So that's the reason I have to keep this other chart here. And I would keep that anyhow because I like your 534 across technique that you had in your original e-manual. It just helps me to keep track of and kind of know how far are we into this particular move, and if I get here late or anything, am I really interested in taking a re-entry up here. I generally don't like to re-enter after 261.8. I just think, and I know this went a lot further, but I just think that it's it gets riskier.
I think the overlay with the study there to the range chart is a perfect market internal combination.
What's that, David? Say again.
I was saying that the way you have it there with the overlay of the study onto the range chart is very powerful there. You don't, the visual down below is good to see because you were talking about double or more. You can visually see what double or more looks like. But right. As long as you could see what it is up above, then you could tie that in and say, hey, whatever combination move you're looking at.
Yeah, having these having these symbols, I think, is that what you're talking about, having these symbols on a chart?
Yep.
1 minute or, and like I say, they just don't paint well on this Flex Renko. They miss. And so that's why I keep them on, I keep them on a 1 minute chart, and on this 10 range chart where the hidden, and I can see these, you can see if they're really extreme or not, that kind of stuff. So yeah, it could be used as, I think, Brad, I think you brought that up. You could use this as an internal for trading oil or gold or beans or whatever it is that doesn't have a tick, a tick or a NIS or something, it can at least help you, I think, kind of get a feel for what's going on behind the scenes. So, Brad, no, these are not the same DLLs. I don't think I've posted these in the room before, the 2 DLLs to do the order flow. But what I would do is, and we can get started this way, is I would put together one of these charts. I think I'm repeating myself now, but I would put together one of these, and it would have the numbers bars on it, on the top, and I'll leave this in there. You guys can strip that out if you want, but so if you don't want the, if you didn't want, this piece of it, you don't have to show these. It's like to use this 534 that you always did years ago, David. I just think that's the bomb. Because even when you have a, when you get a pullback, for instance, in the Flex Renkos, I kind of want to know if that pullback came back below the 534 on this other chart or not. It's combining 2 methods into one. Okay. And like Pat says, you get that confluence. It's kind of cool.
So to understand, the chart on top would be your core chart, and then you would overlay to any other chart you wanted, whether it be a 1 minute chart or a tick chart or a minute chart. You would overlay the study from that top chart, right?
Exactly. Yeah, that's what I'm doing. So here's the core chart. So on the 1 minute, there's a on the 1 minute. Here it is. This goes out to the CL 10 tick range, chart number 17, and gets the bid-ask volume edges alert version 2. And then it paints it on to the 1 minute over here.
There you go.
So that's one way of doing it. I just can't, and maybe I haven't toyed with it enough, but I just can't seem to get it to order flow alerts. I have it here, but see where they show up? Those are up buying market. Why are they up there?
It's probably because it's a range bar, and the range bar is going to identify differently, most likely.
Exactly, yeah, because we're painting these alerts off of these range bars up here.
Right.
And so because the Flex Renko calculates different, they can show up in weird spots.
I wonder
or not show up at all.
I wonder what it looked like just on an HA bar without the Flex Renko. I think you did that right, though. The 2.5.
Well, isn't that basically what we have here?
Yeah, those are just HA bars.
Yeah, these are Heikin-Ashi bars based on the fixed 10 tick range bars above. There they paint out nicely.
Yeah.
They always have. Once in a while they get up in there, because as your range expands, yeah, and your Heikin-Ashi body gets wider, the range bar above does not get wider, so the signal plants right on top of the bar.
All right.
But that's a piece of information too. If you start seeing these, look at the buying that came in here on this order flow, on this move up, relative to the selling. That's just let's say you got long, what time of the day is this? You get this, let's say you got long somewhere 1326. That's right at the close, right? For me it is. So 1326 right here. Let's say you took that buy signal right there, right? And you're like, well, I don't know, but okay, so you took it because it's a valid buy signal right there, right? Yeah. And then you start seeing these come in, which is all of this. Oh, we're getting our server back again. Which is all of this pressure 3 times more the ask action than the bid action on these bars, and you're going, I'm in this thing long. Holy smokes, this is good. This is a good, powerful, strong move. let's say you get in on, I trade 1 CL, you get in here in 1, you see this right after your buy, you go, I don't know, I'll throw another one at it, I'll average up, because you're seeing all this, you're seeing the order flow just cooperate with you, and that, of course, that can change, but it's all, like we do, it's all probabilities. But if you see these things happening in your favor, it's like, holy smokes, I'm going to, I'll try a little something extra there or whatever, just because I can see behind the scenes what's going on. These upward triangles make that green bar much more powerful, is what I'm thinking. I guess that's probably one way of saying it. It makes these more powerful. So,
hey,
but they do. I'm sorry, go ahead.
Quick question. How are you linking the, when you link it on that bar, how's it showing, the cursor showing up on the others?
You mean these?
Yeah.
Oh, that's beautiful. That's under,
crosshairs.
It's global cursor, symbol global cursor.
Okay.
I've had to look for it twice now, and I always forget where it is. But if you just Google or you go to Sierra and go symbol global cursor, then when you click on one, then they all, and then I have all these set as well to scroll in unison. Just because as you go through stuff, you kind of like to see what's going on the other charts as well.
Very nice. Nice feature.
Yeah, the other goofy thing, well, here's your 4-hour chart. I track this Taylor cycle day 1, 2, 3. This is off topic, I know, but this is where I track the cycle day 1, 2, 3, and I only use the highs and the lows, the low cycle day 1 and the high cycle day 3. That ES guy has measured levels for each day and all kinds of crap. I don't do that. And this little guy up here is just simply another range chart, I believe. Yeah, just a standard range chart. But I took the study for the time per range bar study that Sierra has, and I added a little code. I'll share this too if anybody's interested. But the thing I added was you can use this maximum duration of 5 minutes or whatever you want for a bar. So my personal preference is if a 10-tick range bar takes more than 5 minutes, then I just cap this thing at red, and I'm not that interested in trading that market because you got to sit there too long. So I have 6 symbols up here. So I can take in the morning, I take a real quick glance across those boxes, and I go, what's moving overnight? What has some motion to it? And so, what was I going to do to show show this title bar, and then that's horrible to look at, but yeah, that's not very good to look at. But the point being is that look at oil from well, this is the 1:30 my time close until it opens up the next morning at 8. Who wants to? I don't want to trade that market. Look at all those range bars, and that's just 5-minute minimum. Those could have been 20-minute bars, And then you look at well, here inventory came out today. Here's where inventory came out today. Look at this. No time on those range bars. They just gone. And this is, once again, it's not a trading tactic or anything. It's just something I look at, and you go, if it gets to be too much of this, then I feel like there's no follow-through potential, or the follow-through potential is lower. And so I try to just trade markets when you're in this, where you got some bars that are forming more quickly, I guess is what I'm trying to say. So it's not a trade tactic. It's just more of a feel-good thing, I guess. We're just trying to look at it and and go, is that market moving or not? So just for instance, I know, Pat, you're going to hate this if you're still here, but this is my gripe against the ES. There. That's the ES sessions. 6-tick, 2.5, yeah, so 6-tick range. I think this is a 6-tick chart. I'm starting to get a little punchy. Oh, look at that. That's a mistake. Yeah, still a lot of red bars. So from the open this morning until the close, that's how many of the range bars were greater than 5 minutes long for 6 ticks.
Mm-hmm.
It's just hard to, so it doesn't stop you from trading, doesn't start you to trade. It's just I kind of want to know whether things are moving or not.
Yeah, sometimes the ES trades between, on the fib forecast, 382 and 618, and just rocks back and forth as the big players are looking for buyers or looking for sellers. So you have to get to know the levels, but the one thing that's really nice about the ES is it's very predictable for levels.
That's what people say. If you're a levels trader, the ES is the bomb.
Yeah,
because
it's the best.
There's so much liquidity, it just sticks to those levels.
Yes, it sure does, and everybody knows the levels. Yeah. Yeah,
so it becomes self-fulfilling, doesn't it?
Right.
Yeah, yep. And so, anyhow, this is kind of the way I do this. I got the 20 tick and the 10 tick, or the 20 and the 15 in oil, and here's the 1 minute, and overlay a bunch of stuff over here. But basically, so this is, I don't know, I guess we kind of got into how I operate, which is neither here nor there, but I'm always interested to see how other people are doing it too, so.
Well, this is great, Mike. We really, really appreciate it. How about this? We'll go ahead and get started. We'll get the DLL, or we'll get the file in the folder, and then we'll have the members in the room try it out for a couple weeks. Maybe next month we'll do a follow-up, see if there's any questions we could do. But then, people can ask in the room, and if you got time and you're not trading, if you're willing to answer, that'd be great. I'll give you the mic, and you can go ahead.
Yeah, and I do want to stress, once again, don't try to use these things as buy-sell signals. And, because I've tried that, and it always comes back to, am I at a level that the order flow is confirming for me? You still have to have that spot where you want to trade, and then you look to see if the order flow is helping you. Well, okay, that's what I've said it, so I don't even want to go any further on that, but I don't want to see people get in trouble by going, oh, hey, there's an absorption bar, I'm buying, or whatever, I just saw sellers get absorbed, I'm buying. You can, but you really still have to have your trading plan, I think, and then you look to see if this can enhance your trading plan, is kind of more the way that I'd like to see it, see it being used. And I've been watching this for, it's probably a couple years now, so the subtle nuances of it, and whether the bars are tall or short, or that as people a lot smarter than me might catch on right away. It took me, in fact, the other day I thought of that. Why can't I buy on a pressure bar up? Why can't I buy at the base of an indecision bar? It just kind of hit me one day, and so far that's been working. You get like one in early or something,
Cool.
So.
All right, guys. Part of the perk of being in this room here, it's hearing from people like Mike and Pat and some of the others contribute along the way, and I think this has been great. So thank you, Mike. Thank you so much. And
absolutely.
This rolls. Again, guys, if you have any questions, you can always ask Mike in the room. He's here all the time. And then, Mike, take as much time as you need to put whatever you need to put together, and then let me know.
Okay, I'll tell you this. I'm out the rest of the week, so I can throw something together over the weekend. So we're going to have to shoot for the first part of next week.
Sounds great.
Because I just can't be here the rest of the week. So
okay.
Bums me out, but all right. Well, thanks, you guys.
Thanks,
appreciate you sitting through it.
Thanks.